India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming out of a holiday. The voting here in Mumbai and Maharashtra is done. 23rd, that is Saturday, we will get the results. Geopolitics, politics and geopolitics, both maybe a little bit on the on the easy, and I think that is exactly what we need as we start this new session. But otherwise, there is lots and lots of news flow, new news flow, which we need to address. I'm Prashant. With me, my colleagues Nigel and Surbi. And Surbi is back in the studios with us as well.
Yes, absolutely. Back from the extremely polluted Delhi air. And guys, I can tell you this, it's not just a headline or something in the newspapers or what we report here in the media. It's real. You cannot walk in the national capital of this country without, 2 layers of masks. And I think that's really, shameful. And hopefully, the state and the central government, everybody will get their act together and find a resolution. That's not how you want India's national capital to be known as.
Well, hopefully things, improve on that front. But Prashant, we went into that midweek holiday on fears of geopolitical tensions. I think that settled down a little bit at least for now. So that's good news.
No, absolutely. And I think it was pretty dramatic.
Yes.
Market was up cruising 250, 300 points.
Yeah.
And suddenly about 200 of those points were gone.
I saw the market at around, I think, 1 o'clock, just cursory on the phone, and it seemed fine. It was 300-point move up and all. When someone mentioned in the evening saying, "Oh God, look at the sell-off," I said, "What sell-off?"
Well, that kind of a day. But let's just hope that today is a little better because the cues aren't all that bad. And you get the sense as you walk into today's market that maybe that rally on Tuesday, the last trading session, was kind of stolen from us because of the geopolitical stuff. So maybe that is something which is due. We'll see. But you got the action up on your screen, and of course, as you come out of holidays, you've got 2 days of market action to deal with. There is Tuesday's Wall Street and then last night's Wall Street as well. So cumulatively, this is what we've seen. S&P is up 0.4%. NASDAQ is up about 1%. The Russell 2000 is up about 0.75% as well. So it's positive, 2-day change. 10-year yield, can you believe it? Unchanged. -2, +2 basis points. And we left off at about 4.41%. Dollar index, and I think for the dollar, maybe the thing to watch is incremental moves. So is the dollar starting to move back up again? Last night it was up 0.4. Cumulatively, it is only up 0.3%. But the rate, the marginal change here in the dollar, I think, is what matters, especially here in emerging markets with what that does. Now, oil prices flattish, 0.3% lower, $73 a barrel is where Brent price is left off at. Post-market hours, you had the NVIDIA numbers which came through, and NVIDIA results met, but were not really a blowout. They were not really above expectations. Even their guidance, 37.1 was the expectation. 37.5 billion is the actual guidance. So they were not blowout. Post-market hours stock, the last I checked, and it could change, is down about 2.5% or so. And that's a large weighted name with great influence on that market. Bitcoin, and this is just last night now. Bitcoin last night hit a fresh intraday new high. There perhaps is going to be a crypto role in the White House. That's essentially what was the announcement from the Trump team. And I think we'll have to watch developments. Really, that will legitimize a crypto as an asset class and how. So that's something to keep an eye. Now to geopolitics, just 2 pieces of news flow I want to put out. There were, U.S. market early on was sharply lower. And that was on news from Bloomberg, which said that Ukraine has fired a UK-made Storm Shadow missile into Russia. And indices were down 1.5% at one point. And then they recovered. There was another news flow. This is from Reuters. And that said that Vladimir Putin, the Russian president, is open on Ukraine's ceasefire deal with Trump. There are basically 2 ways to look at this entire Russia-Ukraine situation. 2 theories, really. One, of course, is, the fact that both sides are, in a way, escalating because they want to have the upper hand. When Trump finally takes charge on the 20th of November and he says, well, stop talking, it's essentially going to be facts on the ground. Who's got how much territory? And you want to be in an advantageous position at that point in time. That is, of course, one. The second, more devious theory really is that, you basically are, you want the war to be in a situation where it's very difficult to Trump to pull back in a straightforward, clean kind of way. So we'll see. But from here all the way to the 20th of Jan till Trump is in the White House, I think you will hear these headlines. Hopefully nothing big happens and it's just sort of, skirmishes in that sense. Just to circle back and finish off the levels here. So the Nifty, it needs to, as I said, that rally fizzled out and there's a feeling that perhaps it's pending and we need to do it. So we need to sustain for that first above the 40-hourly exponential moving average. 23,727 is about 200 points. Those 200 points which went away in the last hour of trade on Tuesday. Support zone comes in at about 23,200 to 23,350. This is for the Nifty. The Nifty Bank saw selling pressure at the 40-hourly exponential. These are levels, the 40-hourly on both the Nifty and the Bank Nifty we put out on Tuesday as well. And we saw selling pressure exactly there. And we need to sustain above Tuesday's high for the Nifty Bank, which is 50,983. So we'll see if you're willing to go there. Support for the Nifty Bank comes in the recent lows, two-day low, which is 49,950. GIFT Nifty will give you a sense of how we are starting out. About 5-point change. It's absolutely flat. There is that news flow at the bottom of the screen with regards to the Adani Group, which I think is also it's a bit sobering. It's a large group, large conglomerate, and I think that doesn't help at the margin. We'll talk more about that as we go along. Surabhi.
Caution, and more caution from, all the cues that you've described and what we've seen over the last two trading sessions. And that's really playing out in Asia as well, because there's a fair amount of red on Asian screens this morning as they're taking a lot of this news flow on board. So look at the markets when most of them, Nikkei is down about 7/10. The Chinese market's lower, Hong Kong is lower. Singapore is absolutely flat for the time being. Taiwan's on the lower side as well. And what's kind of, exacerbating problems is the fact that the dollar took a bit of a pause while I was away. But I think over last night and going into today, you're again looking at those, inching back towards the 107 zone, 106.6 now, almost thereabouts. So that remains a big watch point as well. Anyway, talking about sort of some of the cues over here on NVIDIA, Wall Street futures are slightly lower again. As is the NVIDIA stock. It was down about 2 to 3% in, the after hours trading. So let's see what plays out today. And the issue is that how fast can you run? When you've been sprinting at a growth rate of not 100%, in some quarters, NVIDIA has grown 250, 260% top line growth. And when that pace slows down, how is the market going to digest it given the valuation sort of challenge? And that's exactly what happened, because NVIDIA's numbers for the quarter gone by, the revenue is still up 94%. But if you contrast that, like I said, with the run rate in the past 3 quarters, it is a lot lower, because this is the company that's been growing at 120%, 250, 260% in some of the previous quarters. Even the guidance that Prashant alluded to, the guidance is slightly a shade above Wall Street estimates. But if you just look at it in absolute sense, the company is now guiding for 70% growth in the 4th quarter. So the pace of growth is coming down, which is fine, which would be expected. But again, you have to match that with the valuations. They keep saying that Blackwell chips are selling really well. I think the market's going to make up its mind when it opens out for trade today. That's Wall Street. I want to put a couple of very important points on the table from the European Central Bank. And why is that? Because they came out with its financial stability report. It's flashing red across the board. So just so that we know these things in terms of the big central bank talk, number one, they're talking actually about an AI-related possible asset price bubble. So let's look at the first quote. Concentration among a few large firms, they're referring to the Magnificent Seven in the US without naming them, saying concentration among a few large firms raises concerns over the possibility of an AI-related asset price bubble. That's, red flash number one from the ECB. Red flash number two, they're saying that there is a greater likelihood that negative surprises, including sharply deteriorating economic growth prospects, sudden changes in monetary policy expectations, and further escalation in geopolitical conflicts, they could trigger abrupt shifts in investor behavior and sentiment, and this could spill over across asset classes. So the ECB is actually talking about market fragility because of these 3 factors that it described. And last but not the least, ECB is also quite worried about this whole trade tariff business, and they're taking that on board in the financial stability review, which the central bank does, saying rising global trade tensions and a possible further strengthening of protectionist tendencies across the world raise concerns about the potential impact on global growth. In short, the ECB is very worried about growth. It is worried about trade tariffs, and it's worried about possible bubbles in the AI-related space. So something that you need to keep in mind. Maybe the market's been pricing some of this in, which is why we've seen that post-Trump rally starting to cool off. For us over here, it's been consolidation, but the bias is very, very negative. I think protecting Monday's low is going to be extremely important for the Nifty, 350 thereabouts. Today, obviously, the 200 DMA is going to be in play. Can the bulls protect it, come back above that level or not? On the fund flow side, there's no respite. I mean, there's been a sell across most of the days, the 2 days that I was away, including, of course, the previous trading session, about 2,800 crores of FII selling, 3,400 crores of FII selling and 2,800 crores of DII buying coming in. And like Prashant mentioned, yes, we are going to watch out for the Adani developments. I mean, the charges are, and we are seeking a response from the group as well. The charges are of bribery, of possible fraud, and there is an indictment in the New York federal court. So this overall, I mean, just adds to the negative sentiment. Unfortunately, as I look at it, I mean, I'm not reporting anything positive, but Nigel, hey, how are you looking at things?
Well, for whatever it's worth, the exit poll suggested that the BJP will come back, will hold on to its gains in both the state elections and Maharashtra in particular. So if that holds out, then on Monday, in fact, we'll expect a positive reaction. That's point number one. The second factor is, we had that geopolitical issue that was playing out when we wound up trade. Well, it seems things have settled down a little bit with regard to Russia as well as Ukraine. In fact, the US market on that night itself, that's on Tuesday night, it managed to recover all those losses and ended in the green. So that's the other factor. The problem point is this, the dollar index. It went down to around 106 odd, but overnight it's back at around that 106.6. And that dollar index strength is a negative for emerging markets and India as well. However, today we have the Nifty weekly expiry, so things will pick up in the second half of trade. Well, there was a sense that you're getting a bit of a short covering bounce on Tuesday's trading session because the Nifty was higher, the Nifty Bank was higher, and the open interest on both of them were lower. And the FI data perfectly tallies with that because you did see that the shorts were down close to around 25,000 contracts or thereabouts, and there were some mile long positions. First signs after a while of some shorts getting covered out. So hopefully we can get some kind of good news which propels the Nifty to move higher because the shorts are still heavily stacked in the system, particularly from the FIs. The options data comes up for you on the screen, 23,800, 23,700. Both of them were fairly active in trade, which brings us to the level. Tuesday's high, that becomes an important reference point on the upside. So 23,781, you want to get past that to feel more and more confident. The hope the bulls will have, though, is let the upside be, for the time being. Hopefully, this 23,200 odd mark, which is the reference point on the downside, that can hold out. So that's the broad range you're looking at the options data, looking at the recent high as well. The Nifty Bank, well, it did very, very well in the last few trading sessions. In fact, in Tuesday's trading session, it showed signs it wants to go towards the 20 DMA. Now, currently, it's bang in the middle of the 20 as well as the 200 DMA. So for the time being, you'll want to defend the 200 DMA and then try to fight back towards that 20 DMA. So those are the important levels to look at. Well, two stocks I'm looking at. UPL, they have been indicating they're going to do something about their balance sheet. They're going to be doing some kind of deleveraging. There was a rights issue as well that's been announced. But they have also gone ahead and divested some stake in one of their subsidiaries. So that will help their cause with regard to, deleveraging. And the second stock I'm looking at is PSP Projects. We had broken this story. Vivek had broken this story on Tuesday. And now that deal is official. However, the price at which this deal has been done is a little bit lower than where the stock closed out at. So after the run that we saw in Tuesday's trading session, let's see what happens, given that the Adani Group is in focus today itself. So we'll keep an eye out on both these two.
Okay, absolutely. Important to keep those on the radar as well. Thanks for that, Nigel. So let's quickly get started with the equity call of the morning. This one is coming in from Surendra Goyal of Citi, who says, post 10% correction in the Nifty, valuations are more reasonable. With Nifty one-year forward PE now just slightly above the 5-year long-term average. He says second quarter earnings were weak for consumer sector, but status quo in most others with decent double-digit growth in financials, industrials, healthcare and telcos. Looking ahead, he says potential second half recovery in public capex and rural demand are positives, while urban consumption and asset quality remains a watch point. He adds their September 2025 Nifty target is 25,000.
All right. Well, Sunil Paul of Goldman Sachs also weighs in. He says that Indian equities should be relatively insulated from the macro headwinds of a stronger dollar, shallower easing cycles, and likely higher U.S. tariffs in China, which are our base case expectations for 2025. Domestically, he says While India's strong long-term structural growth story remains intact, growth has been cyclically slowing and impacting profits, which led them to downgrade their view on India equities to market weight about a month back. He says their economists expect India's GDP growth to decelerate to 6.3% year-on-year on continued fiscal drag and slower credit growth, which should continue to weigh on consensus EPS expectations. Okay, well, let's welcome in Ben Powell, Chief Middle East and Asia Pacific Investment Strategist at BlackRock Investment Institute. Ben, great to have you with us here on the program. Good to have you back. Thanks indeed. Prashant this side. Generally the acknowledgement and the realization, Ben, that for broad emerging markets, it's going to be much tougher environment heading into 25 because, Mr. Trump wants the US to be the only game in town in that sense. But also at the margin that maybe India is lesser impacted because, trade, etc., we're not that dependent directly on the US. Just your thoughts, Ben, since we're speaking, I think, the first time post-elections. How is the market environment now for EMs in India?
Yeah, hi, Prashant. Great to be with you. That's exactly right. I think there are clear headwinds for the emerging market complex writ large. Most obviously, perhaps, a stronger dollar. Now, with that being said, I do think it's very important to observe, maybe it's obvious, but it's true and important, not all emerging markets are the same. And in an increasingly fragmented, kind of uncorrelated world, that point, which perhaps has always been true, is even more true. And I think as we move into an era of US exceptionalism to the power of Trump, that's going to continue to be true. So I don't think we can just think about emerging markets as a single block. We need to be more careful and more precise. And within that context, India, of course, has got a lot going for it around longer-term dynamics of demographics, productivity growth, and so forth. But more to your question, I think, Prashant, India finds itself in a fascinating position where they can potentially, and obviously this is to a degree risky and needs to be played carefully, but to an extent, India is in a position where they can prioritize, India can prioritize its own interests and potentially look to do deals and align with kind of both sides of the trade war. So, it's a more complicated world. We're all going to have to navigate it. But actually, as a nation, India finds itself in a pretty strong position to try and actually take advantage of some of this complexity.
Ben, hi, good morning. Great to have you on. Yeah, we here in India would really hope that in an increasingly complex and volatile world with too many moving parts, investors will see the solid story that India still perhaps remains. But, to talk about this complexity, and I just want to, draw your attention to what the ECB said yesterday in its financial stability report, right? They're flashing red all over the place on potential tariff wars, on geopolitics, and on this potential AI bubble as well. I don't know if you had a chance to go through some of those highlights, but what do you make of them? Do you think the market will will pay more heed?
We're still quite constructive, and the AI enthusiasm, I have to say, we at BlackRock, the world's largest investor by far, we still think the AI enthusiasm is completely appropriate. This is a revolutionary technology, something akin to the Industrial Revolution, electrification. So this is a big deal, I think it's fair to say. Now, with that being said, excitement is fine, but we are financial analysts. We need to be appropriately sober, I guess, and kind of bring it all down to a more practical level. So we would be focusing on a kind of three-stage story for the emerging, for artificial intelligence. The first stage, which is kind of where we are currently, is the build-out. Stage 2 will be adoption by different sectors and companies. And then hopefully a long way down the track can be societal transformation. But we're not there yet. Where we are is the build-out. And you're seeing, of course, hundreds of billions of dollars of real money flowing from the big companies into the requirements they have to build the energy architecture, the real estate, data centers exist in the physical world, and all that kind of stuff. So for us, the enthusiasm is appropriate. But of course, we would be a little bit nuanced on kind of directing our investment enthusiasm, and specifically where we would be at the moment is in the build out and kind of the CapEx recipients, because the numbers are very huge and continue to grow very significantly.
So is it a bubble or not?
No, I don't think so. They're making real money. So people sometimes ask me, is this the 1990s again? And I really think the answer to that is clearly no. If you think about the late 1990s, I won't name names, but there were certain companies, not only did they not make any earnings, they didn't even make any revenue, and they were valued at billions of dollars. So these companies are making real money, obviously, huge quantities of money. They have extraordinary pricing power. I guess I should just speak for myself. I am a little bit addicted to all of my technology. That gives these companies extraordinary pricing power. And it seems a very different situation from the bubble back in the 1990s, at least to us.
Well, Ben, welcome to the show. And this is Nigel on this side. I recall you telling us the last time around as well, India is well placed and you'll be more cautious on being underinvested rather than being overinvested in various emerging markets. Given that sort of a backdrop and given that India is relatively best placed, since you mentioned billions of dollars, our worry is billions of dollars have been flowing out of India. The FI outflows have been a little bit worrying. Given the post the correction, the longer term story for India, do you think pretty much most of that selling could already be in the price? Because I think last count, it was nearly around $14 billion of outflows in a matter of around 45 days.
Yeah, we've had a bit of bad luck in India. I think a few things totally beyond the control of India have happened, right? So we had China enthusiasm. So maybe some money flowed out of India into China. We've had a strong dollar on the back of a Trump win. And maybe we had a little bit of excitement and slightly stretched valuations in India. So a slightly fragile economic equity situation in India was then confronted by a couple of surprises. I would say I think some of the China enthusiasm is abating. They're not quite delivering on the big fiscal side. So when one is running emerging market monies, maybe some of that money can start to come back or at least stop flowing out of India. And the strong dollar, fair enough, Trump has won and a big mandate, so that makes sense. But it seems likely that some of the big moves have happened. So hopefully those two kind of external headwinds should be abating, and we can get back to focusing on the India story, which I think, as we all agree, continues over the medium term to look very favorable. But again, I'd make my point as I made with emerging markets. I think that's equally true within individual countries. So within India, we would, for example, be focused on the infrastructure side, government and corporate still with relatively strong balance sheets, still substantial infrastructure requirements across different parts of the country. So that's an area which we think has got a kind of a domestic political tailwind, and there's the money to fund it. So India, we hope that some of those headwinds are abating. Valuations, of course, have come down, so a bit more reasonable. But even so, we'd be kind of picking our spots, and infrastructure, as an example, is an area we are more enthusiastic about.
Okay, all right. Got that, Ben. Thank you very much. Great to get that perspective in this morning. Appreciate you being with us on the show today. Well,
thank you.
That is the view from BlackRock. Let's quickly move on and tell you what more you can get on the show today. Lots of corporate interactions also lined up. Coming up at 8:30, we will have Deepan Mehta, first up, of Lexer Equities, joining in with a couple of fundamental stock ideas. At 9 a.m., Abhishek Gaushande of Sharekhan by BNP Paribas will talk about some of the major trends in the auto space. At 9:20, we have Venugopal Gare of Bernstein joining in. He's our market master of the day. At 9:30, we get chatting with the management of Suzlon. They talk about the opportunities in the renewable energy space, the way forward, and of course some of their own targets as we're looking at 200 gigawatts of renewable energy. After that, Arnab Banerjee of CEAT joins in, talking about the impact of falling rubber prices and the outlook on demand going ahead. At around 9:50, Saswata Guha of Fitch Ratings, as well as Anil Gupta of ICRA, join in to talk about the stress and the signs that we've seen in the quarter gone by in the financial space. And finally, towards the end of the show in It's the Economy, Lata today is in conversation with A.K. Bhattacharya and Aditi Fadnis of Business Standard to talk about the possible impact of the Maharashtra and Jharkhand elections on policy.
Time to slip into a snappy break, but we've got a lot of stock-specific action that we track for you. We get to that in just a bit in our special Top 10 segment. We're looking at UPL, PSP, Tata Power, Aegis Logistics, Telecom stocks, NLC, GNFC, Godavari Power and Ispat. All of them will be reacting to positive news flow, while you have the Adani Group and Dr. Reddy's that could be reacting to negative news flow. Stay with us. We get into further detail on the other side.
We've been telling you that most of the Asian markets are a shade of red. Let's see if the Nifty can buck that trend. Right now, the implied open is in sync with the global cues, down about 25 odd points. So what about individual stocks? Well, our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Let's start, Hormaz, with you. Lots of news coming in over the last couple of hours overnight on the Adani Group. Fill us in.
It's back in the news again, isn't it? The Adani Group and the US District Court and the US SEC both have come out with their respective orders against the Adani Group. Now, what the US District Court has had to say, and I'm reproducing this verbatim, is that in or about and between 2020 and 2024, senior executives of an Indian renewable energy company, which was a portfolio company of an Indian conglomerate, an issuer company that operated in the renewable energy sector, whose securities were traded on the US exchange, and that issuer's largest shareholder, who is a Canadian institutional investors, participated in a scheme to bribe Indian government officials to ensure execution of lucrative solar energy supply contracts with Indian government entities. Now, during the same period, senior executives of the Indian renewable energy company conspired to misrepresent the company's anti-bribery practices to US-based investors and international financial institutions, and concealed from those same investors and institutions their bribery of Indian government officials to obtain billions of dollars in financing for green energy projects, including the corrupt solar energy supply contracts. And lastly, the court order also says that in addition, senior executives of the issuer company and its Canadian institutional investor conspired to obstruct the US government's investigation into the bribery scheme. So who does this order name? It names Gautam Adani, the chairman of the Adani Group, Sagar Adani, who is the executive director of Adani Green Energy, Vineet Jain, the MD and CEO of Adani Green Energy, Ranjit Gupta, the former CEO of Azure Power, Cyril Sabanis, and 3 other individuals as well, Saurabh Agrawal, Deepak Malhotra, and Rupesh Agrawal. Now, in addition to this, the Securities Exchange Commission, the SEC, has also mentioned, and I quote, that Gautam Adani and Sagar Adani orchestrated a bribery scheme that involved paying or promising to pay the equivalent of hundreds of millions of dollars in bribes to Indian government officials to secure their commitment to purchase energy at above market rates that would benefit Adani Green and Azure Power. And as alleged, Gautam and Sagar Adani were engaged in the bribery scheme during a September 2021 note offering by Adani Green that raised $750 million, of which approximately $175 million were raised from US investors, and that Adani Green offering materials, including statements about its anti-corruption and anti-bribery efforts, were materially false or misleading in light of their conduct, is what the SEC has said. Now, in response, GQG, who's been an earlier investor in the Adani Group in the height of the Hindenburg scandal last year, said that they are monitoring the charges against Gautam Adani and others and reviewing their details for action, if any, required in their portfolio. And they also say that 90% of their clients' assets are issued in issuers unrelated to the Adani Group as per their portfolio diversification strategy. So the Adani Group stocks will remain in focus. Expect them to open in the red today.
Hormuz, thanks very much for that. So there are just two more things. One, of course, is the fact that all these charges relate to, from the US side, relate to things which have happened here in India. But the reason why these charges have been brought is because of fundraising related to some of these projects, underlying projects, which are being sort of executed here in the country. So I just wanted to sort of put that on the table as well. Hormuz, thanks again for that. Apart from, of course, Adani, we're talking about near term. Keep an eye out on some of these PSU banks as well, which are lenders to the group as well. Well, more on that as we go along. UPL should be in focus today. Sonal is here to tell us why. Sonal, morning.
Good morning, Prashant. Well, UPL will be in focus because their subsidiary has received some money. It is via stake sale, 12.5% in Advanta's seed business, where Alpha Wave Global will be investing $350 million to acquire that 12.5% stake. Remember, Advanta is the subsidiary of UPL, which has already received some money from other investors as well. The transaction is a combination of primary sale, where they will be receiving an investment of $100 million, and secondary share sale by UPL to the tune of $250 million in Advanta by UPL. The primary proceeds will be used in the business of Advanta seeds and for their inorganic and organic growth, and the secondary money will be used for deleveraging their balance sheet, something that UPL had been talking about for a long period of time. Now, remember, this deal values Advanta at $2.8 billion, and when KKR had invested around $300 million, that valued Advanta EV at $2.25 billion. So there's a valuation upside that we are seeing with this deal. So going with green here. Also, the company has announced that they will be doing a rights issue to the tune of 3,377 crore rupees. This is at 360 rupees per share. It's lowered from that 4,200 crore rupees that they wanted to raise earlier. But yes, these two events positive for UPL. See some green tick on the stock today.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Vamakshi. She's here to tell us about that big deal that was announced on PSP projects. Morning, Vamakshi. Vivek gave us a heads up, and that is official now.
Well, absolutely, Nigel. Very good morning to you. Yes, it's a CNBC-TV18 news break confirmed. Adani Infra Limited will be acquiring nearly 30% stake in PSP projects for almost 685 crores from PSP projects as existing promoter, Mr. Prahlad Bhai S. Patel. Currently, Mr. Patel and his family own nearly 60% stake in the company. Now, since the Adani Group is acquiring a stake of almost 30%, which is above the 25% threshold, it also triggers an open offer. The open offer price has been determined at 642.06 rupees per share, which is coming in at a nearly 4% discount to the current market price. In addition to that, let me quickly take you through some of the important takeaways from the conference call that was held yesterday. They say that the partnership will propel PSP car projects into becoming one of the leading EPC companies in India. They also highlighted that currently the company is under discussion with the Adani Group for four projects worth almost 3,000 crores. They also plan to tap into opportunities that come through from the Adani Group operating. They also want to increase their operational expertise by entering into newer segments like airports, data centers, with the use of their precast technology. So overall, going with the green for PSP projects on the back of this deal.
Okay, all right. With the caveat that obviously when the overarching sentiment is a little cautious in the Adani Group of stocks because of other issues emanating from the US. We'll take that on board. Vamakshi, thank you very much for that. Let's go to Vinny. She's watching out for a bunch of stocks as well. Vinny, morning.
Good morning. Yes, a few stocks that I'm keeping an eye out on today. We have Dr. Reddy's. We're expecting a bit of a red here because the US FDA has come out with the Form 483-7 observations. This is for its Balaram API facility, which is in Hyderabad. The inspection was carried out somewhere between 13th of November to 19th of November. Obviously, we have to wait out for the further details of what kind of observations are these. But the company has obviously said that they will be working with the US FDA and will reply to them within the stipulated time. But yes, as of now, 7 observations, so red is what we're expecting. Tata Power, we're expecting a positive up move here as the company has entered into a strategic partnership with Drug Green Power Corporation and they will be collaborating to develop around 5,000 megawatt of clean energy generation, and this is going to be in Bhutan. Let's not forget, Drug Green Power Corporation is the sole generation utility in Bhutan, so a big project coming in for Tata Power. Aegis Logistics, we are keeping an eye out on that one as well, as the company's subsidiary Aegis Wopak Terminals has filed for a DRHP, which is around a 3,500 crore IPO is what they're looking at, and this is mainly going to be a fresh issue. There is no offer for sale that is mentioned, so keep an eye out on Aegis Logistics. Lastly, telecom companies, specifically Indus Towers, is what we're keeping an eye out on. Now, the Supreme Court has ruled out yesterday, that's Wednesday, that telecoms can now avail tax credits for duties that were paid for infrastructures like towers, parts, shelters, printers and chairs against the service tax that they have and they were paying providing the cellular services. So keep an eye out on that. Indus Tower has come out with a notification saying that this would be significantly positive for them and they would be around, there would be a reduction in the contingent liability of around 3,700 crores. So green expected here.
Okay, all right, Vinny, thanks a lot for running us through all of those stocks. But let's wind this down with Upasana, who's joining in to fill us in with a few more stocks that she's tracking. Morning, Upasana.
Good morning, Nigel. First up, let me start with NLC India. The company will be investing up to 3,720 crore for various renewable projects to acquire stakes of wholly owned subsidiary, that is NLC India Renewables, for transferring of renewable assets under the company's asset monetization plan. Now, net book value of assets in the books of the ongoing projects of NLC as of 30th September stands at 6,263 crore. Next up is GNFC. Even this stock will be in focus as company signs a MOU with INEOS to build a new world-scale acetic acid unit in India, and the company will be forming a JV company for this, which will carry on the business in relation to the construction and operation of the world-scale acetic acid plant in India. Lastly, Godavari Power will also be in focus as company forays into recycling of non-ferrous metal and acquires 51% stake in Jammu Pigments Limited for 255 crores. Now, company has stated that it will infuse 175 crores in Jammu Pigments for repayment of unsecured debt and growth capital, and will acquire shares worth 79 crores from existing promoters of Jammu Pigments. So all in all these stocks will remain on our radar today.
Okay, all right, got it. Upasna, thanks very much for bringing them to us, all of them on the list as well. So let's quickly recap the top stocks that you need to watch out for today. The ones that have positive news flow are UPL, PSP Projects, Tata Power, Aegis Logistics, Telecom stocks, NLC, GNFC and Godavari Power. Stocks with negative news flow are the Adani group of stocks as well as Dr. Reddy's. Okay, with that, let's figure out what the commodity cues look like this morning. We have Manisha joining in with a roundup of all the action. Manisha, good morning. So what's it looking like?
Well, thank you for that. You know, with Ukraine using long-range missiles and Moscow lowering its threshold for nuclear retaliation, has all the safe haven buying coming back into the markets. So you have the US dollar index, which is back above one-year highs. Gold prices have gained for a third straight day, and we are at a one-week highs onto this one as well. What the markets will watch out now is the U.S. Fed December rate cut probability, which really seems to have turned around quite strongly, with 61% probability of a 25 basis point rate cut and a 39% probability suggesting that it could be unchanged as well. So this is something that the street will watch as we go ahead from here. But it is about the metal crisis and lack of new stimulus from China, and the fact that the China solar panel production is in excess there seems to be weighing on to some of these metal prices. So you have silver prices, which fell 1.5% overnight. Copper prices continue to be under pressure. And it's quite interesting on how steel is, because you have HRC steel prices at 13-week lows, but the rebar steel is trading at a one-month high. So it's quite mixed as mixed can be, because amongst all of this, aluminum continues to outperform because of China revoking the tax rebate. So aluminum continues to be at a multi-month highs, but the other metals clearly struggling.
Okay, well, thank you very much, Manisha, for that. We'll take a quick commercial break here. We're going to come back in just a bit. Deepan Mehta is going to be with us for some fundamental stock conversation that's up in just a bit. Stay with us.
Welcome back. You're tuned into Bazaar Morning Call. You're on CNBC-TV18. As promised, Deepan Mehta, Director of Elixir Equity, joins us on the show. Hi, Deepan. Good morning and good to see you win. Well, let's talk about UPL. They promised the street that they're going to do something about their balance sheet, which included a rights issue. Now they've gone ahead and diluted some stake in one of their subsidiaries. And this will be a relief to them. What's your view on the stock? It's been an underperformer. The industry they're in seems to be in a bit of a tizzy. But this news is good.
Yeah, Nigel, good morning and thank you for having me on your show. See, I think over the years, UPL has done so many acquisitions and it has completely complicated their revenue structure, holding structure and business operations. And they are present across the world, I think in Latin America, Europe, US, Australia as well. And therefore, what happens is that even if one or two regions do well, other two regions do badly. And because of that, there's a lot of volatility in their earnings. And lately, because of very poor global industry trends, we have seen the company suffering losses as well. And I think steps are being taken in the right direction in terms of de-leveraging the balance sheet. But on the whole, the entire business structure and the way, its presence in so many markets and its past track record doesn't inspire confidence. So if on account of this news, the stock price does rally, in my opinion, it's a good opportunity to exit out of the stock.
Okay.
All right, that's UPL. Deepan, hi, good morning. I was going to ask you about PSP projects, but then the larger question has become around a lot of the other Adani Group stocks as well, right? PSP, obviously, because there's a takeover in the works. But your thoughts, if you've seen PSP and how this deal could sort of perhaps play out, and the larger issues, because we will go back to looking at if there is any sort of a negative implication for the stocks, the listed stocks here in India from the Adani Group, given the headlines coming out from both the SEC as well as the courts in the US.
Yeah, that's right. It'll be good morning. Very difficult to say the outcome of whatever has occurred in the US. But Adani Group's acquisition of PSP and earlier of ITD cementation is very positive for shareholders of both these companies, because a lot of captive business can come to these companies, and Adani, of course, is a leading player in the infrastructure, setting up infrastructure projects. So there certainly will be a lot of advantages to these companies. As it is, we are seeing a bulging order book position for ITD cementation and PSP project also, which built this the largest office complex, the Surat Bors. They should get a shot in the arm because of new projects which come through from Adani. And in PSP's case, the order book position was just about lagging because they had completed the largest project, as I said, the Surat Diamond Bors. And fresh order was what we were expecting in PSP. But these are good developments for both these companies. They are trading at reasonable valuations. And I do feel that a change of management over here could provide a further fillip. And I think from a long-term investment perspective, both these companies look very interesting.
No, absolutely. And by the way, Deepan, thoughts on, say, Reliance Industries, which on Tuesday before, market sold off from very low levels, were starting to come back up a little bit. But then, of course, weakness ensued. How would you rate prospects? Do you own it in the portfolio? Have you bought recently, more importantly?
Good morning, Prashant. No, we don't own Reliance in the portfolio. Yeah, I think that we have seen a significant correction in the stock price. But, when you're buying Reliance, you're actually buying three companies in a single stock. And all the three companies have very different prospects and very different investor interest as well. For example, we're very positive on Reliance Retail, but not so much on the oil to chemicals. But because there's no way of buying Reliance Retail separately, that is affecting the kind of appetite which is there for Reliance Industries stocks. The management has been talking about listing these businesses separately, but I think the modus operandi is very important. If it's going to be pure play IPO, then that will mean that holding company discount will come into Reliance Industries and the stock could see even further fall. But if it's a straight split in the company, then it is very advantageous to minority shareholders, and you may see a superb rally in the stock price.
No, I get that. Deepan, just one other space is life insurance companies, when I think you have a slightly positive tilt. Stocks all sold off. Even in the morning when markets were rallying sharply, they were all down on FM's comments that banks should focus on their core business and not focus on selling insurance. Bank assurance is a very large channel for insurance companies. You think it was overdone? It was no directive. It was just sort of, the FM urging banks in that sense.
See, I don't know how much of that will actually fructify because at the end of the day, the commissions which the banks earn is quite significant, and it's a business which they can do easily because they have the captive customers, and bank customers also prefer to have everything under a single umbrella. So I don't know why, and I don't think it's anyway affecting the actual functioning of a bank. It's a separate division and separate employees look at it. It in no way impacts the overall banking business. So I'm a bit surprised over there. I don't think it can materialize in a significant way. And a correction in insurance, in life insurance companies on such news could be taken as an opportunity. As I said earlier, that with usual disclosure that we prefer LIC amongst the best housing companies. I think it is trading at 60-65% of its enterprise value, and all of the insurance companies are trading at significantly like 2-3 times their enterprise value. So from that point of view, there's a good arbitrage over there. And what we saw in PSU banks, we may see in LIC as well, where the valuation gap between both these segments tries to narrow, and that certainly benefits the shareholders of the PSU companies, in this case LIC. So very positive on that company. But as I said earlier, it's a company in which we and our clients are invested, so our views could be a bit biased.
Okay, all right. Very quickly, Deepan, before we let you go, what about Honasa? Mama Earth has come back down to earth. After going to around 500 rupees, these results were very disappointing. And for me, the problem is not so much a stock-specific issue. The problem is when the management disappoints to such an extent, it rattles investors on the whole. But let's talk about Honasa after this correction. Do you think it's come to those levels that you want to give it a look, or do you think there's not enough clarity? Stay away.
No, Nigel, I think there's full of uncertainty around Honasa. It's best to avoid it. The management hasn't done a good job in managing the expectations of investors, and such news should have been disclosed well in advance as a form of good corporate governance, but that did not happen. So I would just avoid it for the time being. It's an interesting business, but I think let's have more certainty on how its revenue visibility is before we take any plunge in it.
All right, Deepan, stay with us. We've got a couple of more things we want to put to you, but for now, we'll take that quick commercial break here. We'll have Sudarshan and Mitesh with technical trading ideas. Stay tuned. That's coming up. Okay, welcome back. We've got the market, which is looking, the GIFT Nifty will come up on your screen. It's down 65 points. So that's a clear-cut kind of pressure coming through. And I think at the margin, that entire news flow around Adani is, of course, adding to a little bit of pressure. From overnight, I mean, of course, the big cue was the fact that the dollar, it just took a two-day break, but it's back up above, it's back up about 0.5% last night as well. Now, Mitesh and Sudarshan are with us with what they want you to do in terms of specific trades. Gentlemen, good morning. Good to have you here. Mitesh, on Tuesday, market was coming nicely. And then you had, I'm exaggerating to make the point, but it's like a mini black swan.
Yeah.
And, it just came off very sharply. What are the levels and what would you want viewers to do?
So, morning, Prashant. I think, the first level to watch on the downside would be the recent low which the markets made on the hourly and 2 hourly chart. So that's around 23,400. With the mild gap down, I think, the scrutiny in the first half would be if there is follow through post the gap down and if we actually test and hold the levels of 23,400. So till that breaks, I still believe that there could be chance of a pullback happening in the next couple of days. But yeah, in the short term, 23,400 is what I would look out for. And while I'm not looking at a big reversal, I think a pullback could possibly see us test the recent or the highs of Tuesday around 23,750 and in the best case scenario 23,900. So I think upside would be limited, but because of the extreme oversold readings, there is some optimism that if 23,400 can hold on, then we'll have a bounce back.
Okay, all right. Let's see if that indeed plays out. Morning, gentlemen. Sudarshan, what would your call be? Would you play for a bounce today?
Yeah, good morning. See, sometimes it happens that the markets are being affected by factors beyond the control of technicals or market movements. Today is probably one of those days. We have a big news event which has hit us, and we have no idea of how the markets will react. We know that the futures are significantly lower than what they were. They were actually up and they are now down. But beyond that, what will happen when the markets open? When the say UK and US offices open, will they be selling by the FIIs? I mean, nothing is known. So on a day when nothing is available for us, the best trade is not to do anything in the indices, focus on stocks.
Okay, all right. So focus on stocks. Let's talk stocks then, gentlemen. Sudarshan, what is your list looking like today?
I have a list of buys. Now, as I've told you that we have no idea of how the markets will behave, but if they do have some kind of order, then Titan is a buying opportunity, stop under 3170. UPL is a buy, although I've heard some news about it. I'm not sure if that is positive or negative. But UPL on my charts is a buy with a stop under 532. The only intraday short is Naukri Info Edge with a stop above 7720. And GMR Infra, which is now coming out of a very long correction, may be a buying opportunity with a stop under 7750. The bigger point is today is a day when you need to be very careful and cautious.
Okay. Mitesh, morning. What about your stock list for the day?
Morning, Subi. I also have a mix of buys and sells. On the buying side is Hero Motors with a stop at 4725 for targets of 4900 and on the selling side is Voltas with a stop at 1717 for targets of 1630. I also have a sell on Cummins with a stop at 3335 for targets of around 3230 and HDFC Bank completes the list. That's a buy call. Keep a stop below 1720. Look for targets for around 1775.
Okay, all right, gentlemen, got that. Thank you very much. We will take a break, come back to you a little closer towards market opening. When we come back on the other side of the break, we'll of course have the pre-opening rates. So let's get a sense of whether the fall is going to be along the lines of what the implied open has been telling us. Also, Abhishek Gaushande of Sharekhan by BNP Paribas joins in. We'll discuss some of the key trends and the stocks to bet on in the auto sector. Welcome back to Open Exchange. We're coming to you live from the CNBC-TV18 Motilal Oswal studios, and we have just about 15 minutes to go before trade kicks off. In the next couple of minutes, we'll start getting the pre-open rates. The overwhelming sense is negative if you're looking at global cues, which is why the implied open has been pointing southwards right from the morning. Well, before we get those pre-opening rates, let's actually listen in to some commentary that we got in from government functionaries. Speaking at FICCI's annual general meeting, the Defence Secretary Rajesh Kumar Singh has said that India's defence industry is at an inflection point, and 75% of India's current defence capital expenditure is now directed towards domestic procurement. Take a look.
Our focus increasingly has been on ensuring that we spend our capex within this country. The ratio we originally set out 3 years back was about 60% to be spent within India, 40% outside. The ratio for the current year has now been enhanced further to 75%. And we intend to double down on that indigenization exercise that we are doing. This is one sector where there will be a lot of expenditure happening, about $20 to $25 billion per year over the next 10 years. What we have right now is about 2% of our GDP is spent on defense expenditure. Our expectation is, frankly, that we will meet our whatever are the requirement of our services. We should be able to meet quite easily with a normal increase in our budgetary outlay. In fact, often it is difficult to fully exhaust that budgetary outlay precisely because of the hard road that I mentioned, which is indigenization, and also some of the supply chain issues that are afflicting suppliers worldwide also, which means that a lot of your contract fulfillment timelines keep getting stretched. But nonetheless, as I said, even if we maintain it at 2% of our GDP, as we grow at 7%, we should be comfortably able to meet the requirements of our armed forces.
All right, well, that's a Defense Secretary. Interesting comments there, and kind of reinforcing the fact that Make in India, making defense products in India for Indian armed forces and, of course, for the world is very much on track. Deepan is still with us. Deepan, that's a space which is corrected quite a bit, although we did see signs of life on Tuesday after a long time. PSUs and PSU Defense Index actually was, I think, one of the big gainers on Tuesday. Any thoughts and anything you like there?
Yeah, Prashant, I think it's an interesting space, and yes, valuations have come into the reasonable level. They were earlier very expensive. With usual disclosure that we and our clients are invested, two interesting companies come to mind, which is Hindustan Aeronautics and Bharat Dynamics. Unfortunately, the numbers for both these companies were pretty soft for the September quarter, but there's great earning visibility because of the kind of order book position they are sitting on. And in fact, I would go to the extent of stating that Hindustan Aeronautics is amongst the best defense play, considering its position and the kind of products that it manufactures and the potential in terms of new order booking. So the stock had run up significantly, and now we've seen a deep correction. It's a great entry point. Again, a disclosure that we and our clients are invested in it.
Okay, so HAL remains a pick for Dipan. Dipan, before we move on, just a word on these gas stocks, right? They have collapsed like a pack of cards. And we all know why. The reasons are very well documented. Second time round that the allocation has been reduced for them. But the fact is they're down 40-50% from the peak. Would you venture in with a buy, whether it's IGL, MGL, any of these names, or would you stay away?
No, sir, we stay away. And my heart goes out for the investors on those companies because these are completely bolt out of the blue and it was not factored by any analyst or research report. And these were great, cash machines steadily growing. And now you have this development. At the same time, this entire EV revolution also going to impact future demand for gas. So every rise is an opportunity to exit out of the stock. And one should be bottom picking because they've seen such a steep correction.
I just want to make a quick mention, and we'll put it out on flashes as well. GQG Partners, GQG, of course, is one of the largest investors in Adani Group stocks. It trades in Australia. It's a listed company. It's down 22% as we speak, over 20% right now. So that's a large cut which is coming through. As I said, we'll have it up on flashes as well. The pre-open is on, so maybe just run through the Adani Group stocks as well, because there'll be lots of interest around this in terms of what the impact, etc. is. It's on your screen. 10 lower on enterprises. Sports is down 10. Energy Solutions is down 20. And we should look at some of the others as well, which are going to come up on your screen. Green is down 20. And power is down about 20% as well. So that is a very sharp cut, which is coming through across the board on the group stocks. We'll have that up as well at the bottom of the screen. Dipen, any thoughts here on the group and the stocks here?
No, Prashant, very difficult to say at this point of time. There's just far too much uncertainty. But one can say that gradually the valuations in the Adani Group stocks were coming to reasonable levels. And earnings also have been pretty decent. But this kind of news flow certainly sours the sentiment. And in markets like this, which are anyway trending lower, bad news will have a more exaggerated effect on stock prices. So we may have to live through this uncertain and volatile period in Adani's group stock companies.
All right, Dipan, appreciate you joining in, giving us your view on a whole host of stocks. Wishing you a good day ahead. We look forward to chatting up with you, either later today or in the coming days as well. Well, let's talk about the auto sector then. Abhishek Gaushande, the Deputy Vice President Research at Sharekhan, joins us on the show. Hi, Abhishek. Good morning and good to see you in as always. Well, let's talk about the festive season. What did you make of it? At various times during the festive season, actually, we're getting mixed trends that came out.
Yes.
So at the end of it, what were the trends, if you could tell us? What did relatively better and who is best placed?
See, what we can say that at the beginning of the festive season, the hopes were very high. But in between the festive season, the perception were weak because of a commentary about sluggishness during the first half of the festive period. But overall, as per the numbers or the report which FADA has released, we're seeing that two-wheeler segment has almost registered a strong 12-13% kind of a growth. The PV segment, despite being a high base and a high inventory, has registered 6-7% kind of a growth. CV was 1%. So what we can say, although on an overall basis, it has somehow led the initial expectations that the FADA has made up of roughly, I think, 45 lakh units kind of a thing. But given the kind of a situation in the rural areas and the inventory pileups, that what I can say that for at least for a two-wheeler sector, it is quite satisfactory. And in the PV segment, it has somehow helped in clearing out the inventory. Now, going forward, as we move from this November and December, these are considered to be a lean period. So probably the OEMs would try to match up the retails and clear out the whatever with the inventory available there, so that they can start FY24 with a fresh or the lower inventory side. Now, considering the festive season and side by side this Q2 performance, so Q2 was one of the quarter where we've seen a slowest growth in the overall automobile sector. It was just 2% growth, and we have seen on an aggregate basis, this was, I think, first time out of the 6 quarters when overall EBITDA margin has contracted, mainly because the two key players that Maruti and Tata Motors missed the estimates. But on the overall peg, the two-wheeler players have performed well, and I think that the initial estimates at the beginning of year that the street has met up that the two-wheeler segment will do high single-digit to low double-digit kind of a volume growth. That is still continues. So we are continue to be positive on the two-wheeler segment compared to the four-wheeler players. So in a two-wheeler pack, we like Hero MotoCorp, and in the four-wheeler pack, that what is happening with the Mahindra and Mahindra, which is continuously outperforming the PV segment. So in four-wheeler segment, we like Mahindra and Mahindra.
Okay, so you like two-wheelers more than four-wheelers. Within two-wheelers, you like Hero above the others, and you like M&M. On M&M, Abhishek, since you brought it up, hi, morning. There's so much happening with the company, right? And I read a report just the other day saying that now M&M is going to look at repositioning itself. It's not just a SUV player, but a premium and high-end, level SUV player looking at their EV launches, etc. Question is simple. How much more upside to the M&M stock, given the glorious run already?
See, what is happening that if I compare this Q2 result for Mahindra and Mahindra, so this was one of the quarter when all of its cylinders fired well. This kind of a scenario was seen when similar to that of Tata Motors in Q1 of FY24. When all of your segments are doing well, you are continuously registering good EBITDA margin. I think on an absolute basis, this was the second consecutive quarter when its EBITDA was close to 4,000 crore. Consistently maintain this 14% kind of EBITDA margin. So when you are outperforming the segment, when you are delivering strong growth, then and you are being valued as SOTP basis, and much of the things are coming ahead, then the street would be little liberal to give you higher valuations, and the overall playing range would increase. So say, for example, earlier it was considered to be a play for a tractor segment only, but now it's along with the tractor, it's a PV segment, and now in the PV, it will be in the both that your IC and the EV segment. So I think in the next week only it is expected to launch 2 new EVs. So you are on a multiple forefronts. You are playing well, and one of the important thing which is coming out with the Mahindra and Mahindra is that its capacity has, especially in the PV segment, has came out on the right time. So it is getting leverage of this up move in the SUV cycle. So in that sense, I don't think that the valuation is kind of a concern at this point of a time for Mahindra and Mahindra. What is more important to see in the Mahindra and Mahindra is that the consistency or the way in which it will improve its performance going forward.
Abhishek, thank you very much for that. Appreciate it. So there is the view coming in as far as the auto space is concerned. I think we got our 9-10 calls ready. Sudarshan and Mitesh are with us. Gentlemen, morning again. Sudarshan, what do you have?
Well, consider buying Titan, which will stop under 31.70.
Okay, consider buying Titan under 31.70. Mitesh, what about you?
Well, go with a buy on Hero Motors for targets of 4,900.
Hero has also started to come up a little bit from the lows after getting smashed completely. What we'll do is we'll go across to Sonal now, and we'll revisit some of the stocks we highlighted. UPL as we want to do for now. Sonal, morning again.
Good morning, Prashant. So the story is that there is another stake sale that has come by in their subsidiary, that is Advanta Seed Business, where Alpha Wave Global will invest $350 million. This is for a 12.5% stake. This is the second time we have the company has got an investor in their subsidiary. The transaction is a combination of a primary and a secondary sale, where the primary amount would be $100 million, which will be an investment from Alpha Wave Global, and the secondary will be the sale of shares of $250 million by UPL in Advanta. What will these proceeds be used for? Well, the primary amount will be used for any organic or inorganic growth opportunities in Advanta Seed Business, and the secondary amount that is received will be used by UPL to pay debt in the company, which has been ballooning in last couple of quarters. Now, the deal is valuing Advanta at $2.8 billion, and remember, when KKR had invested around $300 million in the company, they had valued Advanta at an EV of $2.25 billion. So there's a valuation boost which is coming in for Advanta Seed Business as well. Also, company will be raising funds via rights issue around 3,400 crore rupees at 360 rupees per share. This amount has been cut down from the initial 4,200 crores that the company had spoken about. HSBC has written on UPL with a target of 680 and a buy rating. They say company appears closer to rights issue as board has announced the offer terms now. And private equity investment, according to them, is a pleasant surprise coming in Advanta. Rights issue and events positive, likely aimed at debt reduction. And this will also give a boost to their valuations, which HSBC likes about UPL now.
Okay. Thanks very much, Sonal, for that. That's UPL. Mitesh is still with us, and there's 2 minutes to go as far as market open is concerned. Mitesh, the entire Adani Group stocks in terms of levels, etc., this is bolt out of the blue, down sharply, all limit down 10 or 20% respectively. Anything on your radar? How would you look at it chartically?
See, I think I would want to see them settle down. Along with the markets, the two stocks which we track very closely is Adani Enterprises and Adani Ports. They have been already going through a downtrend. And, I think breaking below this level of 2690 for Adani Enterprises will typically mean more correction, and maybe 2580, 2570 is a nice support area, historical support area where the stock can head. Similarly, if you look at the charts of Adani Ports, I think the supports are slightly deep down at about levels of 1080. So I think we might see these stocks touch those levels.
Actually, all of them, they're packed up together. Adani Energy. Remember, Adani Green is the entity where the allegations are about, alleged, again, we're using the word alleged, bribery from the group towards Indian officials in the Indian government in terms of getting more contracts, and also the fundraising round that took place. Anyway, right now these stocks are down anywhere between 10% to 20%. 10% on the larger ones like Adani Enterprises and Ports. Total Gas, Adani Green, Adani Energy, all down 17 to 20%.
Okay, well, this is a developing story, and this is, of course, the top story that we are sort of tracking. We'll try and get your opinion as well on this in terms of how, legally this sort of moves from here, because, of course, this is all happening in the US. We've got the opening bell coming up in the next couple of seconds, and we'll take note of the opening rates, and then we'll get into individual stocks and the levels, etc. as well. So 0.25% lower on the Nifty, 23,428. It's down about 0.5%. The Nifty Bank is down about 0.5%. Well, that's accelerating now. 0.7% straight up. I mean, 160 points lower. So 23,400 is where we are now trading at as far as market open is concerned. So very quickly, swiftly, markets moving down. Nifty Bank is down 0.5%, 50,370. The mid-cap index is down about 0.5% as well. Across the board, there is more red than green. Look at the Nifty heat map on your screen, and I think it's got about 5 or 6 names up in the green. Everything else starting lower at this stage. I mean, the first sort of dip, which was 160, 170 points, has been bought into. We're about 90, 100 points off the day's low, or the opening low, I should say. It's that kind of a day. It's kind of mixed and not very clear. So I'm not sure how much of that initial price action off the lows really we can read into. Surabhi. Yeah,
absolutely. It's in sync with the kind of opening and the kind of market action we've got across Asia. 100 points lower, and remember the Monday low is in question. 23,350 was the low that we hit on Monday. It's the lowest we have been in this round of a sell-off that's been continuing, right from October onwards. Anyway, in terms of individual stocks, Adani Enterprises 10% down, Adani Ports 10% down. Let me complete the Adani Group actually before I come back to the Nifty. You have Adani Energy Solutions down 20%, Green is down about 16, Total Gas is down about 13, 14, Adani Power is down 12. Even ACC, look at ACC is down 10%, Ambuja is down 10%. So it's a slam dunk really on the entire group. So that is one aspect of trade today. But beyond the Adani Group, you've got weakness in names like SBI, down about 3%. Prashant rightly said we need to watch for the lenders as well. Just when sentiment is negative, some of the lenders also sort of get caught up in the storm. So quite a few of the banking names are on the way down. SBI is down 3% now. Dr. Reddy's is down because it has its FDA issues with one of the plants. There are several sort of observations that the FDA has issued. So that's a stock lower. NTPC is down to 2.5%. ONGC, BPCL, BEL. So the other big trend is that PSUs in general are down. SBI is down a little more than the others. Reliance, ITC, the heavyweights are not really helping, both lower by about 1%, 1.5%. So that's not really coming to the Bulls rescue, lever is lower, Titan is lower. Most of the consumer stocks, Tata Consumer, are down. Basically, it's all fall down, barring IT. That's the only space where bulls are trying to find safe haven. Infosys, Tech Mahindra, TCS, these are stocks that are seeing about a 1% buying. Cuts are getting deeper, 140 lower on the Nifty now.
Well, fairly volatile start is what we're seeing, on all these names. Well, our PSP projects, let's see how that one's doing in initial trade, because that had that deal. We had some bit of a run-up ahead of that. And that's why I said this morning that part of that good news could have already been in the price because the street was waiting for this deal to be announced. And now you have the Adani Group that's in the eye of the storm. So that's why, in fact, that stock is, lower. You also have the telecom stocks that are in focus. And the reason that Indus Stars is higher is because the Supreme Court has ruled in favor of telcos. They are allowing tax credits on duties paid for infra assets like towers. So because of that, it appears that that stock, in fact, after seeing a sharp correction, well, it's popped up in trade. Suzlon as well is up close to around 5%. In just a short while from now, we'll have the management that will join us. Coombs Drugs as well, that's the other one that's locked up close to around 5% as we speak. So these are pockets of strength and otherwise a fairly volatile market. A few more notable movers from the broader markets should come up for you on the screen. REC is down 3.5%. Bank of Baroda as well as seeing some selling pressure. And Nalco continues its up move. It's now up close to around 2%. Been mentioning alumina is in shortage. Aluminium has got a tailwind as well. Pricing at around $2,700 per ton. The street likes it. The best way to play it. Stock up 2.5%.
Okay, well, that's the picture for now. Still slightly lower, but there is a little bit of buying that's emerging. So now HDFC Bank, look at Bharti Airtel for that matter. More tech names are getting added on the upside. TCS Wipro have joined the bandwagon as well. M&M is seeing buying. So there seems to be a very, very clear flight to safety, quality, and the ideas that the market believes will work come what may, but otherwise still quite volatile.
There's always something or the other, right? Never a dull day in that sense. You got the start, which is down and out, and 23,370 is where we are trading at this point in time. Okay. Well, let's welcome in Venugopal Gare. He's Managing Director, India Head of Research at Bernstein. And Venu, welcome back. It's been a while. Venu, by the way, I must say, was one of the first to write about the slowdown. In that report, which I think came out in September, that things are slowing and markets are not paying attention, and they will eventually pay attention. They are paying attention now, Venu, front and square. But I will get to the market, etc., in just a bit as we go along. But I want to start by asking you, Samir Arora, an investor, quoted a Bernstein report I was reading. I read this tweet. I didn't read the report. I don't know if you saw it. He was talking about the solar opportunity, solar capacity here, solar capacity in the US, and what the solar sort of stocks trade at in terms of market value and what they trade at here. So I just wanted to begin there, Venu. Just that report and what are you guys really saying?
No, so actually that's a very different reference point per se. I guess the fundamental reality of what we are talking about eventually veers down to valuations. So if you were to look at specific companies on the solar manufacturing side in terms of where they are valued relative to potential manufacturing capacities of theirs compared to companies listed in the US with capacities, let's say similar, if you were to make it like to like, there was a significant overvaluation for those particular entities, right? So it was a very specific case, not really talking about solar market in general, but we're really pointing out to overvaluation in some of these sort of future growth areas at this juncture.
So what are those numbers for our viewers, Venu? So for our viewers, what matters is solar stocks, not solar market. And so your point is absolutely...
let me put it this way in a very simplistic way, since I don't want to get to a specific stock. Even if those stocks were to trade at 20% or 25% of where they are in terms of market caps, they would still be above fair value.
Oh, wow. And this is, of course, assuming, sort of a lot of growth and a lot of capacity addition, etc. But that is true both for US and India as well. That's the point you're making.
No, exactly. So I think the overvaluation is not there. The overvaluation is here, right? So that's like the fundamental difference. I think what has basically happened out here is that whenever any new theme or opportunity comes up, you tend to believe that opportunity will play out in a much, much significant way in terms of scale. And number two, most people believe that it is not just an India opportunity, but also an export opportunity. And then you sort of extrapolate that into the future. So that's where potentially where we were in specific cases and specific instances. I wouldn't really call it as a call in the market per se, but this just tells you the euphoria that has in general percolated into anything where you potentially see a theme.
Venugopal, hi, good morning. I have to ask you this because it's the news of the morning, right? What we've woken up to in terms of charges, indictment, SEC notifications on a large conglomerate here in India, the Adani Group, right? Now, the last time this happened, there was another report from Hindenburg. The market didn't take any notice because it was a research firm writing something. But this time, it is authorities and courts, though of a different country. The stocks are down. But I mean, I don't know if you have coverage in the group. Tell us if you do at all. And whether you think this will become a bit of a stock market issue. It did at the first point in time. I mean, when the matter first broke out 2 years ago. But how do you view the overnight developments and the implications for the market as a whole?
No, it's a fair point. I guess it's a topical question. In reality, it just happened overnight. Broadly, I'll give you a top-down representation of how we see from a market point of view, because I don't want to specifically talk about this group for various reasons. See, the approach to us primarily is that some of these incidents that we typically see are not just an India-specific incident. We have seen such cases globally as well on various MNCs over time, and it's very well documented over time, over the last 5 years, 10 years, and 15 years. Not just about market impact, we've essentially not even seen impact on those individual companies in terms of stock prices. Investors who focus a lot on those areas eventually ended up investing in those companies. So what I'm basically trying to hint at is anything of this nature tends to be very short-term, episodic. Cases keep happening. Anything linked to infrastructure and government, it's a global challenge in general. So one has to live with it, and those who invest in this really know the reality of it. So in markets perspective, I think markets will forget it in a day, maximum in a week, and then life goes on. That's the way we would approach it per se. So I won't read too much into what is happening at this juncture. It is sub judice. A lot of things will play out. Eventually, we don't know what conclusions will come through. But I'm not really anchoring my market view based on incidents like this, because I've seen this happening globally over and over again. And some of the highest quality investors I've seen getting into those companies. I'm not talking about Indian names, even MNC names.
Hi, Venu. Good morning and good to see you. And as always, you're mentioning in your note, you're expecting a limited moderation in Nifty, a further but limited moderation in Nifty from current levels of around this 23,500. We've corrected close to 10% from the peak. Give and take everything. The earnings season has been very, very disappointing. The government is trying to do their bit now and pep up some kind of that capex spend. What's the downside first, to our current levels?
Yeah, so you're right. I have broadly been of the view that this year should end with high single-digit growth or returns for Nifty. And my viewpoint was that, look, this is slightly above FD rate, if at all. And what we see from a market standpoint, Nifty is closer to my year-end target of 23,500. I didn't really get swayed too much on changing my target. This 23,500 target, by the way, was also based on higher liquidity remaining in the market. So to put it in construct, this implies 13 to 13.5% free cash growth for Nifty 50 stocks over the next 15 years. Now, that's not really an easy thing to achieve. So there was an element of cyclicality. There was an element of slight overvaluation that I had built in my model when I arrived at this target. So what I mean to say by this is that it is not that we are cheap from a market standpoint just because of the 10% correction of an overvalued market when it was 26,000. Going forward, however, the way I approach it is that this earnings weakness that I've been talking about, not just in September, since May, has been driven by a lot of factors, which is linked to capex evaluation, linked to consumption challenges in the economy, linked to margin fatigue that we were actually seeing across the board. So all that put together meant that whatever we were building for earnings, which is consensus, did not have room for upgrades. If at all, it had room for downgrades. First half, we've essentially ended up seeing probably flat to marginal growth from a earning standpoint. And second half, there's an expectation of 20% growth. I don't think that's going to play out. You will see some degree of potential earnings cut. Now, if you assume domestic liquidity remains and FIIs don't really exit significantly much more from here, and retail flows sustain at the levels that we have seen, I wouldn't really see the downside as much more than 5%. So it doesn't mean market becomes cheap. It's an overvalued market still, but the downside is not much. Very quick thing I want to highlight is that we are still early cycle as a country. There is still room for government to spruce up capex. It's not going to happen in 3 months, but probably over the next year. There is still room for rates to get cut over time. So it's not like liquidity is too rampant at this juncture. So there are a lot of these things which can eventually sort of support the market. When I say market, is economy on a 12 to 18 month view.
Venu, you run a sort of, the India portfolio, right? And there are some small cap stocks also, which you, I think, added about a year ago, maybe a little more.
Yeah.
So for viewers, from a published perspective, 2 or 3 ideas which have fallen enough or which you still think are going to come out winners out of all of this?
Look, firstly, nothing has fallen enough. Okay, so I wouldn't really say that anything has materially corrected enough to say that it's value at this juncture. In fact, the most interesting thing is my SMID portfolio.
From your published list, maybe nothing has fallen enough. I can assure you lots of stuff has fallen 30, 40, 50%.
So,
but we're talking about what you publish. Go on.
Yeah, so you mentioned about SMID portfolio. My SMID portfolio has stocks like Dixon Technologies and Keynes Tech and Muthoot Finance. Right?
Yeah.
They've not fallen at all. I mean, you can call it probably the art of selection, but these were really high valuation, high growth stocks. So I can't even say they've corrected off the peak. They're at the peak at this juncture. So I used to have a stock called Delivery earlier. I actually took profit at 450. So it's no longer a part of the portfolio. That's fallen to 330, 340. We're still not getting back in. But the reality is, on my SMID portfolio, there is nothing at this juncture, which I would probably say.
You seem like you're complaining, Venu. Don't complain. You should actually...
No, not at all. I don't want them to fall.
Send your clients. Well, this is what I said.
The art of...
In my large cap portfolio, I would probably say that, look... let me say large cap portfolio or sectoral perspective, I think there is too much of negativity on frontline retail, for example. Don't want to mention names out there, but the reality is some of these physical retail stocks, have corrected quite a bit off the peak. Maybe those are the ones one could still look at, not try from bottom fishing perspective, but they are stocks which still have enough growth runway over the next 5-10 years. If we were to just point out certain aspects like this.
Large cap retail. We in the studios here are guessing whether that was trend that you were hinting at.
Look, there are only 2 of them, Trent and DMart. As a house, we've got to buy on both.
Okay, all right, awesome, Venu.
Data, so I can share that.
That's helpful. Thank you very much. Always great speaking with you and getting all that perspective. Always a good conversation. Thank you so much for joining in. Just a quick peek back at the market, which kind of is stabilized. I mean, at least the fall hasn't gotten wider or deeper. 23,380 thereabouts is what we're looking at. That's about a little over a 0.5% decline on Nifty at this point in time. But we have a very, very special conversation lined up here for you. It is all about the renewable space and what lies ahead. This is the one space that the market is extremely excited about. And Nigel, we have a very special guest right here in the studios.
Well, that's right. Well, sir, welcome to the studio and thanks a lot
Thank you so much.
for joining in. The renewable energy space is picking up. Is actually center stage with close to around, I think currently the India renewable energy space has close to around 200 gigawatt, which is headed towards 500 gigawatts. So let's get straight to a conversation with Mr. Chalasani, the CEO at Suzlon. Thanks a lot, sir, for coming down. It's been a while since we met as well.
Thank you, especially in person.
Absolutely. So from around this 200 gigawatt to around this 500 gigawatt, could you tell us wind will constitute how much of this journey according to your estimates? And also we have a brokerage note that says that currently your market share is at around 25%. Morgan Stanley note. They expect Suzlon market share to move up to around 35 to around 40%. Do you think that's doable?
Yeah, first let's look at the macro level of 500 gigawatts of renewable energy. There are 2 aspects to it. One is that need of renewable energy because you need green power. More importantly, in India, it's extremely important from the point of view of competitive tariffs.
Indeed.
If the tariff is high, cost of kilowatt hour goes up, your market shrinks in power sector. As per CA study for 2030, which they've done the 8760 hours load profile, and if you want to meet that demand based on the least cost option. That's why they said that you need 100 gigawatts of wind.
Okay.
So therefore, the estimate is you need 100 gigawatts of wind to meet the demand what is predicted in 2030, and also that is the route for the least cost option.
Indeed.
So therefore, this fits both demand and the cost option. Today, currently we're at 47 gigawatts.
So doubling of that.
Yeah, 6 years left. We are right now inching closely. We moved 1.5x last year. We expect it to go to 4.5 today, again 1.5x, but it will touch about 6 gigawatts in our view. I'm talking about country, not us. And then reach about 8-9 gigawatts by FY27 and remain at that. And if not 100, we'll reach somewhere there, close by 90-95 gigawatts. But it will continue beyond 2030. It's a target, but then it's going to continue beyond that. In fact, the expectation is that you need about 140 gigawatts of wind by 2032. So there is a demand for wind because, more importantly, the renewable energy is now replacing fossil fuel from the point of view of round-the-clock load following type of things. So there, solar, wind, and storage.
Yeah.
Together will play a role.
All right.
I think
so from around 48 gigawatt, we're going to be heading towards that, 90 to around 100 gigawatt. That is for the industry on the whole with regard to wind. Got that. What about Suzlon's role? The stock market believes, or various brokerage firms like Morgan Stanley, they say that from around 25% of the market share, you will outgrow the industry and take a bigger chunk, 35 to 40% by 2027. Doable?
See, right now, in the installed capacity, we're 32% in India, in the 47 gigawatts. So we're the market leaders there. And second is, let me not talk about the market share. Let me talk about what is feasible for us to do, because market share depends upon what everyone else does. Today, if you look at our current order book, is 5.1 gigawatts.
Yes.
Which is the highest order book we ever had in the history of 29 years.
Correct.
Okay. And it's growing. It's not that it will stop. And the second most important factor is that who are our segmented customers. Okay. The C&I segment, which is commercial industrial segment, is significantly growing in India. They're using renewable energy to replace a captive.
Correct.
Okay. Because of tariff arbitrage, because of green power, because of carbon neutrality, what they want to achieve. For them, the reliability of power supply is much more important because for their main business is something different. And we are here because with a 30-year track record in the country, and we just don't supply the equipment, we maintain them for 25 years for life of the plant. Every single turbine we supply in India is operated and maintained by us. Okay? We give them comprehensive OMS. Therefore, in our order book today, 54% comes from that segment.
Okay.
That's continued to grow. There is an estimate that they need about 78 gigawatts by 2027. That's a total renewable energy,
right.
Wind and solar. That's the reason we'll continue to grow, because there we are a preferred supplier. Second is public sector. Our share in the order book today is 24% comes from public sector. You know that NTPC, we got this 1165 megawatts of order, single largest contract ever awarded in the country. And then comes your bidding regime, which is growing significantly. So there's a huge potential. So therefore, we expect to grow. So don't hold me to what market share, but then we're pretty confident with our manufacturing capacity, which is further expanding from current 3.1 gigawatts per year. We're expanding it to 4.5 gigawatts by March. So therefore, there is every reason for us to believe that year on year will continue to grow.
So when you are in the studio with us, you must allow me to ask a classroom type question. We'll come back to Suzlon and your targets in just a bit. But I have a broader question on the viability and the competitive advantage of wind over solar. I mean, look at the kind of conversations that are happening on solar all around the country, right? In terms of just being the most viable option, the cheapest option, also tell us, I mean, right now, what is cheaper at current cost, solar or wind? And given the huge expansion on solar, is wind going to face a real challenge? But look at, NTPC's renewables sort of IPO is coming, and there's so much excitement around solar as well. So isn't solar a real threat?
This is a question which I keep facing every single place. Today, solar is around, let's say, 2 rupees 50 paisa at the bus bar. Wind is, let's say, 3.5 at the bus bar. But I'm on record saying that wind is cheaper than solar. I'm making that statement with full consciousness because you need to look at time of the day, demand-based pricing. That's one is easy to check is when you go to the exchange, look at the price and the exchange during the solar generating hours and the wind generating hours. Wind generates in the peak period on the time of the day. If you look at, just take the latest one of July and August. During the solar hours, weighted average tariff was 2.53 and 2.38.
2.38 weighted average?
Yes, price from the exchange.
Okay.
Means you can buy at that rate from exchange.
Okay.
During the wind hours, it is 4.7 to 5.5. Okay. You're generating at 3.5, but actual value of that is 4.7 to 5.5. You're generating at 2.5, the actual value of that is 2.38 to 2.55. Now it's for you to judge which is cheaper. What is most important is that we forget about demand-based pricing. Load profile. Wind actually generates when there's load. Indian load profile. One is time of the day. Second is 2/3 of wind generation on an annual basis comes between May and September. And solar doesn't generate in the monsoon. So what is important is it's not wind versus solar. Wind alone cannot survive.
Demand adjusted.
Solar cannot survive because we are now talking about FDRE bids. We are talking about replacing the fossil fuel. It has to be wind plus solar plus storage. There is no debate on that.
Peak demand, Mr. Chalsani, is evening hours when demand peaks.
Yeah, especially the
load really goes up and there's no sun.
Especially what is happening is when I started my career, the evening peak is to be between 6 and 9.
Correct.
Okay, the TV used to come, Doordarshan used to come, and things like that. Today the evening peak is 6 to 12.
Correct.
Because our activity is going up.
Absolutely.
So that's the time wind generates.
Yeah.
Solar is shut.
There was no Netflix back then.
So solar is completely shut. And then if you take solar plus battery, people talk about that and look at what is output cost. You're putting 2.5 rupees solar power into the battery. Battery doesn't generate. There's a battery storage and conversion cost. When it comes out, it is 8 to 9 rupees. How can that replace 3 rupees 50 paisa wind?
Absolutely.
So it just doesn't. It's easy way is not the right way to go.
Got it. I'm going to come to you. I have a couple of questions, but I just want to read out some news which is coming in right now. Just a quick detour. This is the Adani Green statement I want to read out. I mean, the first time we've heard from the group after, of course, everything which has happened out of the US as we woke up to the news flow. And this is what the statement says, and I'm reading verbatim. The US DOJ, that is the Department of Justice, and US SEC, Securities Exchange Commission, have issued a criminal indictment and brought a civil complaint, respectively, in the US District Court for the Eastern District of New York against our board members, Gautam Adani, Sagar Adani. The US DOJ have also included our board member, Vineet Jain, in such criminal indictment. In light of these developments, our subsidiaries have presently decided not to proceed with the proposed USD-denominated bond offerings. End of quote. That's essentially the statement which is coming through right now. I mean, doesn't really say anything we already did not know, but this is the first official statement which is coming in from the group, from one of the group companies. Back to the solar conversation, Mr. Chalsani. So for Suzlon, you're looking at going into non-wind businesses as well. Is that correct? Or
No. Let me explain to you what we do. We are the only Indian OEM which has in-house technology. We don't buy technology. We design, we manufacture, we execute, plus we operate for 25 years. There's a huge business for us as a service business.
Correct.
Today we operate 15 gigawatts of capacity. In fact, if you look at, people don't know, in the power sector, agnostic of fossil fuel or the renewable power, we come in the top 5 as an operating company. Okay? Maybe after NTPC, Adani and Tata Power. That's the capacity of what we have. And then we are now getting into multi-brand as well for other non-Suzlon turbines. The one which you are talking about is that we have a component supply business, which is the forging and foundry. That's the one which supplies to us, supplies to our competition in the wind segment. They are now doing a couple of things. One is they're moving from wind to non-wind, like railways, defense, and various places. It's a component supply. Okay? And they're also significantly looking at exports.
But this is all within the listed Suzlon?
It is a subsidiary of Suzlon.
Okay, 100% subsidiary of Suzlon.
Yeah.
So they were supplying to you.
It's an independent company.
But now they're looking at opening up the client list to defense, railways, etc. as well.
Etc. as well as for exports.
Okay.
But that's an independent company which just not supplies only to Suzlon in wind. It supplies to every single competition of ours.
Okay.
It operates completely independent of Suzlon. It's a component supplier. That's a business where we talked about expanding into non-wind.
Is that going to be, I mean, do you see a significant room for growth there?
Yes. Actually, today that is capacity being utilized there is 20%.
Okay.
So there's a huge capacity utilization coming up there. So earlier we always thought that we will divest that. So but now we decided there's a huge amount of scope. We don't want to divest.
What are revenues last year and what is the scope really? Because you know
Say 20% of revenue is about 500 crores.
Okay.
Top line.
Okay.
So then you can imagine what is
because areas like railways, defense are also seeing a huge amount of make locally, right? So this ties into that.
Absolutely.
So you're saying, when should we expect first orders from railways?
They've already started getting registered with them because it takes time with railways and defense to go through the process of registration of yourself. That's a process which started, I think, in next, let's say, maybe end of next financial year, the FY27, they would start supplying.
Okay, so from around this 500 crores, how do we see it trend up? Since you're saying that it's only at around 20% or the total capacity just mathematically appears like around 2,500 crores. So in the next few years, do you see this revenue number double?
Will.
Yeah.
But then if you look at our overall operation, it is still a smaller portion.
True.
Okay. While that business keep growing, will it significantly impact our top line compared to the way we are growing in the wind turbine business? I don't think.
So which is exactly where we want to come back and end. Now give us, and this is not just for this year, next 2 to 3 years, what is the kind of revenue CAGR, given the opportunity that you described in detail, sir, what is the revenue CAGR your shareholders can expect? And also in margins, because I mean in the first half, there's been a bit of a dip. In the past, I think you've stated 17 to 18% kind of margin band for the basic business, the wind business. Does that stand? Margins and top line growth.
I expect you to ask me this question. Anyway.
Have to, sir. I'm compelled.
No. Let's say that last year we did 700 megawatt. Here, first quarter itself, we did 550 megawatts. And then 1/3, 2/3 ratio, you know. So you all know what we are likely to do this year. As we stand today, 5.1 gigawatt is order book, which is supposed to be executed in the next 18 to 24 months. And more orders inflow will happen. It's not that it's static. Okay, you will keep seeing us announcing more and more orders as we move ahead. So when there is an order book of 18 to 24 months, it's your guess at how much we're going to do each year. Okay. So last year,
we don't.
You're a better placer. We don't know the business. It's your business.
I don't ask me to put a number to it. I can say is that we will consistently grow at much higher rate compared to what we've been growing, for not just for 1 or 2 years. Consistently for the next at least 8 to 10 years, we see a clear growth path available there, and not just in the wind turbine business, which could be a little cyclical, but will continue to grow much bigger way in our service business, because every single turbine we sell, it comes with our service, plus the multi-brand which we acquired through Renom.
Okay.
Yeah.
All
so
right.
therefore, it is not just the wind turbine business alone which you need to look at it.
Mr. Jalsani, you've seen the long journey of the power sector. I think really a veteran. Appreciate you coming down to the studios.
Thank you so much.
And taking out the time.
Thank you so much.
Thank you very much.
Good to see all of you in person.
Thank you.
Thank you so much, sir.
All right. I think we'll, take note of the market, which is down 200 points. So I think we're at the low point of the day. And 23,300 is where we are at on the Nifty. We're going to take a quick commercial break here. We're going to come back with the management of CEAT. And we'll talk tires, falling rubber prices, end demand in the industry. Is that looking a little weakish? All of that. With Arnab.
What's the outlook for the second half of the year? Mr. Arnab Banerjee, the MD and CEO at CEAT, joins us on the show. Hi, sir. Good morning, and thanks a lot for joining in, Mr. Banerjee. Give us a few basic details. I recall when we chatted earlier, you were talking about the price hikes till September, I think, were roughly around 3 to around 4%. But there have been price hikes post that. So could you quantify it from, for quarter 3 onwards in comparison to quarter 2? What is the price hike that you've taken? And also tell us about the raw material basket. The hope is that things start cooling off. Has that happened?
Right. So price hikes continue even as we speak, and we intend to raise prices even in the month of November. In passenger category, we are looking at price hikes in truck bus radial category. So across categories, in small bits of 1.5%, 2% max price hikes are happening. We are yet to cover up the gross margin gap that has come because of continuous rise of raw material. And if you remember, quarter 2 was about 5% higher than quarter 1 raw material prices. And in quarter 3, we expect the price hike to cool down However, the Q3 prices are also expected to about 1.5% higher than Q2. So slight hike will be there in raw material prices before it kinds of becomes flat or starts trending down from Q4.
All right. And, if you could give us, I think we were discussing about rubber prices, the way it scaled to 240, 250, then it cooled off. I think it stabilized around 210. At current reckoning, what is that price and how do you see the trajectory moving from here?
So natural rubber prices came down to 180, 190 as well. We are entering the tapping season where supplies will hopefully increase in the domestic market and across the world. If you look at global demand, there is no significant uptick that is seen in Europe or in China. So we expect the raw material prices to be, the natural rubber prices to be range bound sub 200. So that's what we expect at this point of time.
Mr. Banerjee, good morning. Prashant here. How's the third quarter panning out so far, sir, demand-wise? And which segment is looking robust and which is the weak link?
So in OEM, there are some stress points, as we know. The MHCV market, the truck bus market is degrowing in OEM. The passenger car market is kind of flattish, maybe 1.5% growth. And the two-wheeler market is doing very well. They're catching up with the FY19 volume. So that trend continues in OEM sales. Replacement had been maintaining that is better. And that the truck bus market is growing in single digit, passenger market is growing in also mid single digits, and the two-wheeler market is growing better, near double digit, with a bounce back in the rural sales of tires. So that's how the domestic demand is panning out. Our order base looks okay on the international business front, though there are some headwinds on agriculture tires in the European market. And there is a temporary headwind also from the LATAM market because of duties that have been erected there. And so there's an adjustment in pricing that is going on there, which is expected to come back to even keel by Q4.
Do you supply to the US, Mr. Banerjee?
Yes. We have started launching our truck bus radial markets in the US. So that's just started this year. And we expect to launch our passenger car radial tires in the US by Q1 of next year.
Is there any tariff risk with the new administration in the US, or tariffs are not at risk?
It's a medium risk kind of situation. Our volume stake is not yet very high, and we think we will be able to maneuver even if there is a low level of tariff imposed on Indian exports. So I think we'll be able to manage given our product mix and the margin structure.
All right. What about the container availability? Have those issues gradually got sorted out?
Yes. The container availability is much better. The freight rates are coming down, but still elevated from where it was in the normal situation pre the geopolitical flare. But yes, there is a moderating tendency on the freight rates. Availability is no more an issue.
Okay, all right. Let's wind this down then with two key numbers, Mr. Banerjee. You warned us the last time around because the start of the year has been soft. Margins in FY25 will be low in comparison to what we have seen in FY24. Now, Q3 appears there could be some recovery, and Q4 we could see a full-fledged recovery. Volumes will pick up, raw material costs will be down, and price hikes as well will come into play. So how much lower do you think margins will be in FY25 in comparison to FY24, given the recovery we're likely to see? And also debt levels, they're holding at around 1,900 crores odd. You have some capex plans though. You're not expecting it to move too much. So does it stabilize at these levels?
No, debt levels is not a concern at all. Our debt EBITDA is much below our agreed norm of 3:1. It's around 1, the ratio. So that's not a concern at all. Our capex plan is also around 1,050 crores, which is about 6-7% of our turnover. Not a concern, and we have been maintaining that every year we'll have to do that much of capex regularly so that we keep growing in double digits every year. So debt, capex, not at all a concern. We are, I think, pacing it pretty well. In terms of margins, it will still be lower than FY25 because half of the year is gone. Q3, as I mentioned, the raw material prices will still go up, and it will only moderate by Q4. So 3/4 of the year is going with an inflationary trend in the raw material price. So margins overall for the year will definitely be looking down as compared to last year, and maybe improve by Q4, and going into next year it will be better. So yeah, and volume tendencies, growth tendencies are better in H2, as I have been maintaining. H1, we expect to grow in double digit definitely in H2.
Okay, all right, sir. We will leave it on that note. Thank you very much for joining in and giving us a perspective of the business and the outlook that is CAT. We do have to get back to the market now, which is now looking at a pretty slippery slide. The cut is over 200 points in the Nifty, and obviously levels have come and gone. The 200 DMA, that's history. The low of this recent consolidation, 23,350, I mean, that's also, the bulls are finding it very, very hard to stay at that level. Actually, today's low has been even below the 23,300 mark. So let's see how this plays out. Let's pull up the Adani pack. Stocks are down anywhere between 10% and 20% across the board. And Adani Enterprises, there was a 10% freeze. It opened up. Now it's down to 15%. So this is how it's playing out. And watch the bank Nifty. It seems that there is a sentiment spillover on a lot of the large lenders as well. SBI is down about 5% as we speak. IndusInd Bank is down about 3%. In a bit, we'll pull up the list of a lot of the financial institutions that have exposure to the Adani Group. We'll just put that up as well. But it's a weak morning, to say the least. So let's try and wrap our heads around how to understand and interpret these overnight developments that surround the Adani Group. The fact that there is an indictment from the New York Federal Court. It names Mr. Gautam Adani along with several other officials from the company and a couple of the financial investors that took part in the various rounds of financing within the Adani companies as well. And then there are observations that the U.S. Securities and Exchange Commission have also made. The allegations are fraud. The allegations are bribery in order to secure contracts within the Indian government establishment. We have with us Sriram Subramaniam, founder and MD in Govern, Sanjay Asher, senior partner, Crawford, Bailey & Co., as well as Mr. H.P. Ranina, who's a senior lawyer. Gentlemen, thank you very much for joining in. And the purpose of this conversation this morning is to really understand how Indian shareholders should look at legal developments which are not in our jurisdiction. This is the US SEC talking, this is a US court talking, but the implications are playing out here in the Indian stock market. Sanjay Asher, if I could start with you. For an Indian shareholder, this is fairly perplexing because the Adanis were given the clean sheet by Indian courts. But now comes these developments in the US. What would your first thoughts be?
Oh, these are allegations which are there. Now, obviously, Adanis will have to fight it out in the US, before the US regulatory authorities and the US court. So we will have to wait and watch as to what happens there. Now, as far as the Indian courts are concerned, they have given a green check, a complete green check to them. So as far as India is concerned, there is no worry. And as I understand, there is a process of settlement as well under the US law in case there are allegations on the FCPA or under the bribery laws in the US. So I don't think this is anything which is worrisome. It's like a fizz. And yes, allegations are there. There have been some observations here and there in relation to bribery allegations. But to my mind, there's nothing earth-shattering in this. It's always possible to settle this, and the dust will settle down.
Okay, let's get in other experts to weigh in as well. Mr. Sriram Subramaniam, do you think this is just going to be fizz? And ultimately, it'll go the settlement way in US courts and with the SEC?
It could happen, but I would like to correct here that the Indian courts had looked at it from a violation of the minimum public shareholding, the Hindenburg allegations, etc. There were no bribery charges per se. This is the first time there is a criminal indictment from a bribery charges. The Indian courts had not looked at the Adani Group from that perspective deeply. So the allegations were more to do with the minimum public shareholding, violation of securities law. But this is a much more serious allegation from a perspective of bribing public officials, bribing to get contracts, etc. And the fact is that these securities have been missold in the US. That is much more telling. So the merchant bankers who sold all those will be indicted. So yes, it is a known fact that many business groups in India need to bribe political parties and bureaucrats across states, across central governments, etc., to win contracts. But for the first time, a large Indian business group has been indicted on bribery charges made in India.
Let's bring in Mr. Ranina as well. Mr. Ranina, the same opening question to you. As of now, there is nothing new legally on ground here in India, but the allegations raised are fairly serious, and the indictment actually sort of names Mr. Adani and several other officials as well, several institutional investors as well that were part of the fundraising rounds. Do you think there could be wider implications for the group here in India?
Yeah, good morning, Surbhi. I think there would be wider implications because this is a very serious charge of bribery, and it's an indictment which is done by the U.S. District Court. Apart from that, the SEC has also come up with certain allegations. So certainly there will be attempt to come to a settlement, and heavy fines will be definitely imposed. That's what I'm sure about, if the charges can ultimately stand. So it will definitely have an impact on the Indian market and Indian shareholders, because certainly the money will have to come from Indian companies. Even if we have to settle and pay a hefty fine, which will run into millions of dollars, it will definitely impact the Indian businesses and ultimately the Indian shareholders. Of course, the courts in India are not concerned with it because this is a crime. They say this is a crime committed in the USA. But what I'm worried about is the implications, both in terms of very heavy pecuniary fines being levied on Indian companies, as well as, of course, on the Indian promoters, reputation-wise and otherwise. So there will certainly be a substantial impact on Indian Adani company shares.
Yeah, absolutely. That's a great point you raise, that maybe there is no legal implication, but there will be, in all likelihood, a financial implication and, reputational issues that would be at stake here. Take that point, sir, on board. Let me go back to Mr. Sanjay Ashar. Sanjay, you said that this could be settled, and let's take on board what Mr. Ranina is saying. It's an unfair question, actually. I shouldn't be asking you about US law. But typically, when the indictment includes charges as serious as, alleged fraud, bribery, are settlements easy in the US?
As far as the FCPA charges are concerned, to my mind, yes. There is a process whereby one can settle the matter. As far as the criminal indictment is concerned, we'll have to see as to whether there's possible for a settlement on that.
Okay, but could this at all lead to any kind of further moves, activism here in India? I mean, I'm just asking a question out of the box here. Could this lead to any kind of fresh legal challenges being opened up in India?
There could be. There could be, yes. There could be fresh legal challenges which vested interest people would initiate for sure.
Mr. Ranina, would this be sort of a fresh case filed in Indian courts? That's still a possibility that investors must keep in mind?
Well, they can file a case for, say, removal of the concerned people who are involved in corruption or whatever. So in case the companies shareholders say we don't want the person to be in the management of the Indian company, since serious charges have been filed against them and they have been indicted. So that could lead to litigation. But as far as damages are concerned, as far as that will be according to the American law, and nothing can be done in India because these are allegations in America. But certainly it will affect the Indian management. That's for sure. Sure.
Absolutely. Yeah. So with that, let's come back to Mr. Subramaniam.
Yeah.
And Mr. Subramaniam, that's the real question, right? Now, legally, whatever has to play out will play out in the US. As of now, there's no fresh legality in India. But like, our legal experts have been pointing out, this does have implications for Indian shareholders. whether it is fines or, settlement fees, whether it's reputation, very senior management personnel being indicted. What recourse do Indian shareholders have, and what would you advise to a lot of the investors today who are watching share prices fall?
Definitely stay out of groups or stocks which have, I would think, corporate governance, I would say, issues. Two is obviously many long-only funds would shy away from this because of their reputation from taking positions or would unwind their positions. Three is even project financing for Adani Group will become very difficult. And so because they have announced a slew of projects for them to raise funding from many agencies or many investors or banks could become difficult if these charges stick and there is this reputation issue. And the cost of borrowing will also increase phenomenally for them, at least 200 to 300 basis points, I would think.
Yeah, so I think this is a developing story. We have to wait and watch and see how it goes. And we will weigh in on all you gentlemen and your expertise again as more developments take place. Thank you very much for joining in. As we wrap this up, I'd like to just pull up the statement from the Adani side. This is the one statement that we have, and maybe we'll get more clarifications as the day and the week progresses. Let's pull this up. Adani Green, just to place it on board for our viewers as well. Adani Green says the US DOJ and US SEC have issued a criminal indictment and brought a civil complaint, respectively, in the United States District Court for the Eastern District of New York against our board members, Gautam Adani and Sagar Adani. The US DOJ have also included our board member, Vineet Jain, in such criminal indictment. In light of these developments, our subsidiaries have presently decided not to proceed with the proposed USD-denominated bond offering. So right now, the only thing that we have from the group is that they have taken all of these charges on board. They've acknowledged them, and they've said they're not going ahead with the US dollar-denominated fundraising, the debt fundraising that the group was looking at. That's all we know. Maybe we'll hear more from the group as the day progresses. Let's see. Wait and watch on this one story. All right. As we move forward and take our next break on the show, word on the markets: 100. Come back. Let's straight away head back to Mitesh to get a sense of trade right now and what can be possibly done. Mitesh, so I guess the thing is that at least there's some buying at dips that's coming in. It's not, at least not now, it's not a one-way fall. What would your advice be on the index and, of course, stocks?
So on the index, I'm still avoiding. The good thing is that the Bank Nifty hit the 200-day average. The low for the Bank Nifty is at about 49,787, and the 200 average is at about 49,820, and it's managed to bounce back from there. So I think the Bank Nifty can bring some stability, but we are still not buying it. I'm still not sure whether this bounce back will last, will extend, because the Nifty is still weak. So hoping that the Bank Nifty, if it gives some kind of a buy signal on the hourly to hourly charts, maybe then explore some call option positions, but till then I think staying away. And on the stock side, I have one buy and one sell. So a long one, Jubilant Foods with a very tight stop at 603 for targets of 630. And ITC after a long time is looking negative. It could hit the 200 average, which is at about 450. So sell here with a stop at about 463.
Okay, all right, got that. That's, on individual names. Just before we let you go, on the Adani Group, any of the stocks, Mitesh, I know this is too much news flow right now, but on some of the larger Nifty names like Adani Enterprises, Ports, what would the recommendation be? What are the critical levels to watch, given that they're already down 15-20%?
So I think the bigger problem is that they're down circuit limits, I think, both Adani Ports and Adani Enterprises, and I don't know when this thing will stop. So even if you look at the slightly longer term charts, go back to the monthly charts and see where the long term supports kick in. They've already broken the immediate ones. The bigger support for Adani Enterprises is at about levels of 2,300 to about 2,200 zone. which is where the stock had bottomed out in November of 23. So I think maybe around those levels, you might see, some stability coming. I think as I speak, it's hit the 20% circuit down at 22.57. So I don't know, where it will stop. If that breaks, we might see some 2000 levels very soon. So for me, I think both of them avoid till you get some kind of reversal signs, till some accumulation happens. No point trying a long trade yet.
No, absolutely. Got that, because those circuits are opening and then the next 5% down limit is getting hit. Got that. Mitesh, thanks very much. Touch base with you later during the course of the day. For the time being, we will take a very quick break and then it's time for our special segment. It's the economy. Lata will be in conversation with A.K. Bhattacharya and Aditi Phadnis of Business Standard to talk about the possible impact of the Maharashtra and Jharkhand elections on centre and the economic policy.